The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And another edition of the Power Trading Hour with me, your humble but lovable and squeezably soft host, David White. And, of course, at the headquarters of Technical Trading and Investing, TFNN.com, we come to you Monday through Friday, 2 to 3 Eastern Time, every market day. But, of course, we're going to get a day off this week on Thursday. And if you're anywhere in Florida, you better duck, because there's going to be a bottle rocket going over your head every time it quits raining, and or the thunderstorms aren't really going through hugely. Everybody and their dog is firing off some black powder kind of device. Anyway, got a interesting day out here. We popped up to 1626 on the S&P cash. We are down to 1619 and some change out here. Volume has been very, very light. This is probably the last major day of fund buying. Probably going to see extremely light volume. We normally will see those that are headed to the Hamptons on the straight and the B team come in at about noon tomorrow, maybe 2 tomorrow, something like that. We should see ultralight volume through Wednesday then, and we, just about 2 billion shares so far, so pretty light volume for a pretty hard shove out here. But at the moment, looks not a lot more than, what would you say, window dressing, fund buying, the stuff that everybody has to do. And, of course, it's easy to mark up the market when you have people that must buy, that must be fully invested the last 3 days or 2 days of the month, and that's why they do it. They know that there are going to be people there that have to buy, and you can also run some shorts into the market. Anyway, we're going to be looking at other things moving in the market today, but kind of a quiet day so far when you really look at it, other than the bounce that came fairly early in the morning. Seeing some kind of weaknesses, but the weaknesses in the economy just make everybody more sure that we're going to see more helicopters full of money from Ben Bernanke. And kind of what we saw today, numbers for China were incredibly weak. Once again, the lowest numbers in 4 or 5 years for their industrial production started off last night. And, of course, everybody just assumes that means more helicopters full of cash. It's hard to find out if Ben is just job boning, which a lot of people, I can understand, think that what he is doing, that is, he has no intention to taper. But my guess is that he does, because he's seen huge moves in some areas that are unsustainable. And, of course, if he kept it up, it would just cause yet another huge balloon to bust, destroying everything that he's worked for so far. So we'll look at that. Closing prices on the metals today. Gold bounced $31 to $12.55.40. September silver rose 12 cents to 19.57, and copper rose 11 cents to $3.16 a pound. Those are the closing prices on the COMEX market. But some of the other things that we have out here moving are just stocks in a very light volume market. Tesla is up about 7%. What is that? TSLA. Take a quick look at that. Of course, everybody's talking about ridiculous projections for a Tesla. And one of these days, this thing is going to roll over. Probably the most interesting thing is it's getting in to its previous high of May 29th at 114.90. And, well, let's see, hang on a second. Let's go back to this one. Let's draw it one more time. Here we go. Breaking that previous high today that had 25 million shares with a 7.6 million shares. So very, very light volume out here today. What else do we have? CIE up about 5%. It still looks like Cobalt International Energy is CIE. Nice move, no volume today. Looks like it wants to get back up to the $28.69 range. That's the July 31st high from a year ago. But it had 9.2 million shares, pretty much where this thing tends to peter out a lot. And let's see, what else do we have? Baidu, Aurora. I went on a rant on RIM on a Friday. I continue to see this thing having issues. It's off another 2% today, but 622 looks like a very easy pop where this thing could hit. There's two gaps down there. One's at $7, one's at about 625. And of course, with the huge volume we have now, probably might get a little bit of an ABC down move, and then that would be it. So let's see if there's anything else out here moving. It would be looks pretty much like what I was thinking about. Probably the most interesting movement out there, at least for me today, is a lot of these financial stocks. And, you know, are they really doing much of anything? You did have a nice breakout on Morgan Stanley. It is back to support level, and that's exactly where you want it. But as it came through and broke out, the February 20th high of this year, $24.47, 17 million shares, and that was kind of blown through. So it did have a solid breakout. It's pulled back into this price range, but you want to see the volume stay way lower than 17 million shares. And what you had on Friday was 18 million shares as it ducked back down below. So you've got kind of a little mixed bag on some of these. So we're going to look at a few more. Citigroup, another one, same kind of thing. This thing had a little less in the way of high volume as it broke above previous highs. You wanted to get past this March 11th high that had 51 million shares, $47.92. And, you know, you had 40 million shares, 44 million shares. You really never got that kind of thing. This one certainly pulled back in, false breakout. Now, this thing's right back up to that level, but you know, we're looking at 51 million shares as the conservative level, and that we have about 17 million shares so far today. Problematic. Maybe you heard in the background I have a new visitor staying with me. She's all of 9 weeks old and a little mistreated little terrier mix. And we're watching her today. If you hear her in the background, that's what's going on. She's like Nesqueak. My other one's quiet as a church mouse. You would have never known I had a dog here, but this new one is a squeaker, and is running around and wrestling as we speak. But all of 2 pounds wrestling with her new brother of about 10 pounds. Anyway, what else do we have going on? Oh, J.P. Morgan. Wanted to look at that next. JPM. You know, another one, you know, all these kind of the same pattern out here. And that is you had the March 14th high on J.P. Morgan with 32 million shares. So when we got back out and started breaking out 26 million, you had 37 million, 46 million. So you actually had a volume above the last major high in that. This thing did pull back. And did it, I would have liked to have seen a little lighter volume, but not too bad. You did have, 37, 46 million, to kind of pull back on lighter volume here, but certainly no love the last 3 or 4 days as this thing's come back up. You'd really be wanting to put your alarm at about $51 on JPM also. So what else do we have? WFC, which is Wells Fargo. Now this one's kind of interesting. Nice little doji out here today. Very, very light volume. When you look at the last major high, June 10th, 26 million shares across the last 3 days. As we've been going against WFC, you've got 18 million, 20 million, and today about half that, and a beautiful looking little doji out here. So we'd want to be watching these fairly closely, and if I was going to pull something on the trigger here, it would probably be below the displaced moving average of a 3x3. So just keep a close eye on a lot of those financials. Those seem to be the most interesting stocks for me right now, at least telling a story. When, to tell you the truth, there are not a lot of stocks out there telling a big story. And hey, 618 now, up 12 points. But we'll have to see how today rolls out. Of course, everybody's looking at gold. And when we look at that, kind of interesting seeing crude up a little bit. Crude's up $1.25 today. And probably a little bit to do with the Mideast and Egypt's issues out here. What we don't have is a solid close above a 9-day moving average or a traditional moving average of 9 days. We actually went right into that, and maybe somebody else at TFNN has already brought that up. You did come into this gap where you had significant volume, and let's take a quick look at this. Let's take a look at headlines here and see. Just wanted to see whether or not we've got any kind of volume on this. Quotes. Let me just make sure about that volume because it is incredibly light. Maybe that is volume's 12 million shares. So, yeah, it's off a little bit here. There we go. Still very light, 12.8 million shares. So we are having a very light volume in this push. Now, of course, you're going into that gap down of the 26. That gap down had 24.7 million shares in the GLD. So don't have much in it either. So a lot of light volume bounces in the financials and gold too. We'll look at some of these oil stocks when we get back.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Going to look at a few of these stocks that are moving in the marketplace out here. Did want to talk about Stillwater Mining. Kind of an interesting chart out here. We've been talking about some of these that look like they were getting ready to bounce, and we did get a little bounce out of here. This is one that got above the 9-day and or the displaced moving average. But, of course, not a lot of follow-through today, and I suspect we could, especially with all the damage that has been done. Of course, this one's off, 50% off of its highs. Trading around at $10. So you imagine these things are going to go sideways for a little while, but certainly looked as if every time we came back into this $10 range, we always had a nice shrinking of volume from the first time at 10.05 on the October 15th low. That's $10.05, 13 million shares. You get into it 2.7, you get what Wyckoff called the automatic rally. That's one without any real preparation. In fact, that's actually the October 15th one. You go up and retest the high. You get a very clear signal when that went above $14 that there wasn't a lot of demand up there as there was on the September 14th of 2012 high. So you've got this thing now looking like it is setting up for a longer consolidation. And my guess would be that this thing may even get one more shot back down in the $10 range. But just not a lot of juice off the bottom. A little spinning top here today signals that we're probably going to be this thing probably setting up some kind of consolidation range between that gap at $11.50 and $10. And what we probably really want to see is this thing back around that $10 level with about 1 million shares, with no one at all that cares about it. What an unlucky stock that no one cares about. Anyway, we've got some other movers out here. I wanted to look at a few. Let's see what else we had. Looking at the wrong one. No wonder. I was thinking, hey, what else do we have here? Oracle, no big change. I wanted to look at Baidu is what I wanted to look at. BIDU. This is another one that looks somewhat problematic. You got kind of a little bit of cloud cover on Baidu today. Again, we were talking about the PMI numbers out of China. They continue to head lower. And, of course, the numbers out in Europe continue to signal, even though the headlines tell you they don't, continue to show that there is a weakening in Europe also. So there's not a huge groundswell of things changing. There's continue to see some bright shoots here in the States, but the rest of the world kind of sucking wind. Anyway, Baidu out here, this thing, let's go ahead to just a smaller chart out here. This has a high volume low. I keep thinking this thing is getting ready to set up an ABC down to test that $83, $82 level. The April 26th low out here had 14 million shares. Pretty good indication that you're going to come back and at least test around that $83 level. Now, you've got kind of a decent retracement back up to today's high. Let's take a look and see. What would that be? 103. Yeah, 103, 108. There's your automatic ABCs in the art of timing the trades. So it found it automatically, and 103.61 is your A point. Your B point would be 88.08. Today would have been your C point. And what do we have for the high today? What is that? 95.50. That sets you to 79.97 for just a 1-to-1 ABC out here. You know, maybe we get a little pop out of this thing, but certainly looks like this thing is, if you just look at the volume in the last 3 or 4 days on this, just horrifically bad from that high volume low of June 24th. So that would set you up just below those $82, $83 levels. So I think you've probably got an 85, 90% chance you get back in the 83s, and probably a 70%, 75% chance you hit 80 on Baidu out here. So just seeing some other ones. Intel, it's off 28 cents today. Oracle off 41 cents. Let's see what else we have out here. CLAC I haven't looked at for a while. CLAC. We'll look at it when we get back. You can give me a call, 877-927-6648. That's 877-927-6648. Give me a call. It's going to be a quiet few days out here. Brighten my life up. Give me a call.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, pretty much the biggest mover out here today is Netflix, at least in the NASDAQ 100, up $13 and a change at 224.28. Of course, you'd like to see a lot more volume out of this, but it looks like 205, 206 is the up to 210 is about the support level right over this gap that it's had for a while. We continue to watch this. The thought is at the moment that this thing is going to go into earnings and have one more gap up, and it's going to be a 3-gap play. If you go back and look at this over time, it is one of these stocks that has been to heaven and hell before. And let's go back and look at a weekly here on this thing. You got 304.79 back on July 15th of 2011. I suspect, when you look at this, energy not too bad on the way up, but I have a feeling that the energy down is going to continue to be more than this, but probably one more gap up here. You do have a little gap at about 290 that this thing could tag. But everything shows, or everything I can see on this, looks to me like it is dubious as to the quality of the earnings going forward. Again, they won't tell anybody about just how much content is going to cost them from Disney and some of the others. So I'm really on the skeptical side of this. But the three gap play. Well, if we go back here to let's go back to a daily here, so we can see these gaps. If I can, go ahead and draw. There we go. So you can see plainly these two larger gaps, and you have one more back up there at on a daily back in the 380 range. That's exactly where that gap could end up going. Let's go back here and bring this back. You've got that gap right up there, just a tad under 380, and I suspect that next gap up would be something like that. And at that point, after probably the first day or two, I'd probably be wanting to buy the cheapest downside puts on that I could for the three gap play. Let's go out here and look at some others quickly. Let's go back. Yeah, we got a 1 year daily. And what do we have here? Expedia, and it's up a nice little pop. Ow! I forgot this little pooper biting my feet today. Anyway, Expedia is up $2.20 today, up $3, or actually up 3%, what's called 3.5%, 62.35. This thing is coming back into it. Huge gap down for earnings. Nice W formation out here. And can we make a Gartley out of this thing? I thought it was probably setting up for a Gartley. Your D target would be 63.45. I bet that's probably going to show up on the scan tonight. But that's it. Oh, by the way, just to remind you, our webinar, our web guy will be in the morning. But this is the last day for the Art of Timing Trade charts to get 50% off going forward. Tomorrow, it will be 50% more. That's why it's 50% less today. It'll be 50% more tomorrow. Anyway, when you look at this, energy not too bad in the last couple of days back up on here, but what you're really bucking against is this huge volume down day on the 26th of, what is that? We're going to call that the 26th of, I'm going to say that. But, yeah, you got a nice shot out here at 63.45. I would like to see the volume really peter out. You had a lot of volume Friday, but not a lot of movement. And the previous days have been kind of light too. But what we really look now as the X point being broken today, that had 3.4 million shares of this Gartley going into this with 1.5 million shares. So less than 50% at the moment. You have to see how this a day does come in and close out. But that's a very interesting Gartley pattern out here. And other than a lot of volume, you got that, but it'd be very interesting. Not going to get anywhere close to the 8.9 million shares that we saw out here today. Other stocks of interest. Trying to think of anything else new on eBay. Oh, we got a recommendation of the Den to look at Google. This thing had a little Gartley pattern, and it came off that, bouncing back up. Actually not a bad-looking Gartley pattern out there. But what can you say? This thing's bouncing up a little bit, and it could be making an ABC down off this little move here. So let's go back and look at an expansion here, see what we have. It's probably a littler one out here, it looks like to me. What would that one be there? Be 910. Yeah, it's so tiny it didn't catch it. So let's take a quick look. A, B, and today is C. So you did a 60% retrace. If today was the high on that, that would just take you back down to this gap at 844.49. So probably not a lot happening here right now. Let's look at the overlay here and see. You had a close above, a close below. This negates the double repo pattern today. That is, I thought maybe we might catch this one out here with all the heavy volume down day, but might be setting up something a little bit more troublesome down the line. But not a lot here at the moment. Probably 844.49 is the one-to-one. And, of course, you've got a low out here at 847 with 2.5 million shares, and you've got a gap just below that. So that's probably a little fuzzier area than a lot of people would like. Now, in the retracement field, you do have, well, you come right back in with Confluence at that level from, 834 to 822. So that 834 looks like you're going to have kind of a muddling area from about 830 to 840 that's going to look and act like support from the small ABC one-to-one and some other ones. So just a super light volume out here doesn't make me think we have a lot more to go on Google out here. So we did Google. Haven't looked at eBay for a while. Why don't we try that? EBAY. Another one out here that is interesting. What do we got? This thing did test its low, didn't bust it on 1 million shares lighter, $49.55, 14 million shares on March 18th. We got into that, didn't break it, and I'd say being 1 million short down here at $50.09 on June 24th, probably a 90% chance that thing's going to get tagged again. Let's see if we've got an ABC. You've got a 45% retrace already, maybe one more tick back up on this thing. And it could be making an ABC down also. Certainly a lot of volume on Friday, but ended up being kind of a spinning top out here. Didn't actually do that much. C-Trip. Let's take a look at that. C-T-R-I-P. And we look at this one. This is interesting. Another one of these that could be setting up. This is going to be interesting. You've got a huge gap up on C-Trip International, CTRP. That happened on 5/9. This thing has not come back and got into it, but you got a pretty good setup here for $27. And what you would really like to see is a close back below the 9-day moving average or the displaced moving average. You got a pretty nice setup here. This thing's probably not going to be the biggest trade in the world, but you could get, $33, $34 back to 28. Probably not a bad little setup out here. The problem is you're not going to get probably much below that $27 range. You had monster volume on that 5/9 blowout move, probably on earnings if we go back and look at it at $14.50. We got Ron from Denver. How you doing today, Ron?
Good, David. I was wondering if you could just comment on Apple. I was looking at it, maybe long-term calls, but I was just wondering what you thought and what the future is and where it's at right now.
You want that 385.10 low on April 19th tested before you make a play on this. It tested it on Friday on 1 million shares lighter, which isn't enough for me. 21 million to 20 million shares. It also did not test that low. So to me, I think you've got one more chance to get down here to this 385, and you want the volume probably be less than 15 million shares.
There just isn't. Would you say that's probably in the next 60 days?
I'd say certainly the summer. Yeah, I think you've got probably a good setup on this thing, but right now you're just in a consolidation range of about probably 385 to 450, probably something in that range. And the problem is that if all the times I've looked at these puts, you're going to need more than that to make any money on it.
Okay.
If you go out like 60 days, go ahead.
Yeah, from this range, now I was thinking on the call side, but
yeah.
So
no, I mean either way, the premium is probably going to be high enough. I haven't looked at them lately, but almost always when I look at this, premiums are pretty high, and I'm thinking you're going to need probably if you've got 450 in this. As the low side, you probably want to buy them when you think you've got a setup that this thing's going to go back and hit this 480. So to me, that's probably going to be as much movement you need in this stock to at least when I've looked at the puts and calls in it before. You know what the IV is on this right now?
No, I do not.
Do I have that implied volatility? Okay, let's take a look. Oh, I've got it here. Just hang on a second. Let's see. I've got to sign in here.
Would you explain what that means?
What's that?
Would you explain what that means?
Oh, implied volatility? There's going to be a number, and you're going to find it at the CBOE. How much the option moves
versus the stock?
Yes, and it's the, you know what we talk about, the VIX and the implied volatility on the S&P 500?
Mm-hmm.
There is the equivalent for every stock that has options, and it's normally called vol, just VOL, and sometimes you're going to see it listed as IV. And actually I've got to sign in. The website used to be free, but you can get I'm not going to promote them too much, but it's ivolatility.com. And I think you can get a free password for them for 30 days. But you should, if you're buying those, you should understand the underlying volatility. And then there's going to be
what is the base? Zero? And
theoretically, if the stock was going flat forever, you'd have zero. But even then, you could buy insurance on it, right? But think of the implied volatility is how volatile that stock has been over the last 90 days. Okay? So there's going to be a number, and that implied volatility number is going to be something like 30 or 20, or if you're something like Netflix, it's going to be 120. And that implied volatility is going to be one of the factors that goes back in to figuring out how much the premium is on your calls and puts.
All right.
And so it's just like the VIX number. When the VIX rises, pretty much all puts and calls will tend to have higher premium values in it. It's just like when a storm comes, no one's dropping the cost of insurance. And so as that rate rises, and that number rises. But each stock is going to have its own what is known as IV. And that website's probably a pretty good introduction. They've got a great knowledge base, but those are the things that you need to look at as the implied volatility on the underlying stock, and that's going to give you a good idea how much money you're paying for the insurance. If the IV, I like, can you hang on through the break?
Go ahead.
Yeah, if you can hang on through the break, we'll talk a little bit more about IV.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi folks, I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we get back, I don't know, is Ron from Denver still there?
Still here, yeah.
Okay.
No, I appreciate you.
Go ahead. Okay. The implied volatility is going to be very important, and you probably need to have you taken an options course ever?
I'm very familiar with options. I just don't get anything that tells me the volatility of the implied volatility. I know it measures the volatility of the stock, and the higher the volatility, the higher the premiums. I understand that.
Right. There's going to be a number on it, and you can either get them from the CBOE, or there's a website that I've been on that's free for a while. It's called iVolatility.com. And, even one of the first thing is, I'll just read this because I know other people are going to be interested. Basically, you're comparing historic volatility against implied volatilities. Gives you some idea if the options are cheap or overpriced relative to the historical moves in the underlying stock. So basically, you're looking at the past and saying the past is prologue, that over time, we're going to have insurance based on what happened in the past, and no different than, flood insurance. But that is going to be normally you're going to see. I was trying to get it up on their website just because they have it really laid out very nice. They'll have 30, 60, and 90-day volatility. And most option market makers will probably price their options on 90-day volatility or 60 days. So it is just to take a look at that. Go ahead.
Wouldn't high interest rates also make the premiums higher?
It is. That's more of the Black-Scholes model, though.
I see.
Where you're looking at the input. But again, interest rates now are dirt low. So even if they've ticked up 1%, they still really don't have any kind of the input from the Black-Scholes model that they had in the past. 8, 9, 10%, certainly a whole lot of difference in what you pay for the premiums for those options. Right now, it is mostly the volatility of the underlying stock. And here's where I like to buy puts and calls if you can, and that is when the IV number is under 30.
Okay.
And when you want to sell them is normally, or sell something like covered calls or puts, is when they're very high, like 100%. And at that point, you can really, probably a fairly decent living out of just selling those on high volatility. But again, if you check that website out, I think you're going to learn some more out of it. And what I need to do is probably plan a show around talking about how implied volatility actually affects it. The Black-Scholes model, again, was one of the first, in fact, before the Black-Scholes model at all. Option people were kind of forced out on the steps of the New York Stock Exchange and looked down upon, because there was no way to actually price out a option and try to get a fair market value for it. They put that together, but again, I think that was like late 80s or 1991 or 92 or something like that. And of course, I think they got a Nobel Prize for it. But that is on the more general market, and of course, what were interest rates? 8, 9, 10% in 92. Big input on that. Now, pretty minor out there, but you should probably at least know the IV of the stock. And I think what you want to watch for Apple's IV to come down, and I'll talk about that tomorrow and get that ready. Probably be the first thing I do tomorrow. So catch my show then. Thanks for the call, Ron.
Thank you, sir. Bye.
You bet. And I'll do that. I'll look at IV, and we'll talk a little bit more about it tomorrow. See you then. Same bat channel, same bat time.